I've reviewed hundreds of retirement plans, and a recurring red flag that I see couples enter into retirement with is that they don't have a brokerage account. Whether you're familiar with this account, whether you're not, in today's video, I simply and clearly want to break down for you in about 5 or 6 minutes what this account is, some of the tax benefits and features available to you with it, and how it can potentially help you live a much more flexible retirement. Let me just paint a picture, which is going to talk about the problem that I typically see here, is that most Americans today are retiring with a 401k, they have Social Security, and they might also have a small Roth IRA. Now, while this might very well be able to get you through retirement, it's probably going to end up paying more taxes to the IRS than you otherwise would have. And I don't know about you, but not many people like leaving the IRS a tip. They already have to pay them enough. So with this, there's really two main issues. The first being that we don't know what's going to happen to tax rates in the future, right? Take a look a few weeks ago at the One Big Beautiful Bill Act that was passed, and I promise you it's not going to be the last time that tax laws are changed in America. If we take a look at the current debt we have also, really the only way we have to go is up. Now you as the retiree should be looking at this and thinking about what your tax rate is going to be in retirement. It might be higher than you're currently at. It could potentially be lower. Odds are probably pointing into it being higher. But really that lack of clarity there points to the importance of needing flexibility in retirement. And that's something the brokerage account could potentially offer you. Let me talk about the second thing here, and that's 100% of your withdrawal from your 401k or from your traditional IRA is going to be added to your income. And what that means to you is that the bigger withdrawal you take means the more you're going to have to pay in taxes. Let me kind of bring in the brokerage account here and talk about it, because it's the exact opposite on those two issues that I just mentioned. One, only the earnings portion is going to be taxable to you. So if I give you an example here, if you invested $10,000 in something, it rose to $20,000 over the course of a few years, it would only be taxable on that $10,000 portion. If we compare that to the 401k I mentioned a moment ago, 100% of that would be taxable. Furthermore, your brokerage account might also get more favorable tax rates. What I'm talking about here is capital gains rates compared to ordinary income tax rates. In America, we have what's known as a progressive tax system, meaning the more money you make, the more you have to pay. As you continually make more, you jump up into new buckets, and that segment of money is taxed at a higher tax bracket. Capital gains don't work like that. You either pay 0%, 15%, or 20%. And the simple way that you can get these favorable tax rates is you have to hold the investment for longer than a year. That's really all you have to do. If you hold anything 12 months or less in your brokerage account, know that it's going to be taxed at your ordinary income tax rates. But some other benefits of a brokerage account is there's no contribution limits. Now, the government updates how much you can contribute to a 401k or to an IRA every single year, but with a brokerage account, you don't have to worry about this. You could put in as much as you'd like today. The other benefit is you don't have to wait to take this money out. Now, with retirement accounts, you have to wait until age 59 and a half to not have any taxes or penalties than you otherwise would have. With a brokerage account, all of that is out the window. You can put money in today and pull it out tomorrow, and all you have to do is pay taxes on the earnings portion. So yeah, some of the benefits of having this brokerage account in retirement is that tax flexibility. It does give you another option if you're retiring before 59 and a half years old, and it also has some estate benefits to it as well. If you have heirs that you're planning on passing wealth to, your brokerage account is going to work different from your retirement account. Let's say that you have $500,000 in a brokerage account and half of that represents earnings. You know from a moment ago that half of that would be taxable to the government if you were to sell it. What the government says is if you pass this account to an heir after you pass away, they receive what's known as a step up in basis, and therefore if they were to turn around and sell it all tomorrow, which I hope they don't, they wouldn't have to pay any taxes on it. So it can be a real powerful asset to pass on to heirs. If we compare that to a 401k, we have much more restrictive rules. A lot of times your heirs are going to have to withdraw all of this account within 10 years, and it's going to be added to their taxable income. And it really sounds like I'm talking negatively about retirement accounts here, which I'm not. I have a fond appreciation for retirement accounts, but really it's most beneficial, at least tax-wise, to use them in tandem. We often talk about having the 3-bucket strategy, right? Tax deferred, tax free, and taxable. A tax deferred account is traditionally represented by your 401k or your traditional IRA. A tax free account is anything with the word Roth in front of it, a Roth 401k or a Roth IRA. And then finally, the taxable account is the brokerage account that I'm talking about today. It goes by other names such as individual account, joint account. There's a lot of names for a brokerage account. Some final benefits that are rare to a brokerage account that don't get mentioned enough, in my opinion, is if you are someone that donates, the brokerage account can offer a great place to do so from. Now, what I'm talking about is you can give any appreciated position, such as a stock, a bond, a mutual fund, an ETF, to your church or charity in lieu of giving cash. And what you've effectively done is you've allowed yourself to give an appreciated position to that charity. They don't pay tax on it. You don't pay tax on it, which you otherwise would have if you sold it. Then you do have the potential to take a deduction on it. Another potential benefit is the ability to do what's known as tax loss or tax gain harvesting. Now, I promised I'd keep this video simple, so I'm not going to dive too far into that. I actually have another video on the benefits of this, but know that you can potentially take your losses and your gains and you can offset them to have no taxes owed. The last piece that I'll add, and this is specifically for those of you in retirement, is you can potentially pay 0% on your earnings from your brokerage account. Now, this is going to be dependent on the other income that you make, but know that it's an option available to you if you make below a certain amount in retirement. So I encourage you, check what you are currently contributing to your 401k. A lot of times folks are contributing more of their income than they actually knew. And it might make sense after you get past the point where your company stops matching to consider opening a brokerage account or consider having a conversation with your financial advisor about these. Really, the biggest benefits, as I've mentioned today, are taxes and flexibility, right? You want to have the ability to A, decide what tax rate you pay in retirement, and B, decide when you want that income. And that's something that this account potentially allows for. There's no minimum age to get started. There's no minimum requirement to get started. So if there's something you have more questions about, I'd be more than happy to answer them. But thank you guys so much for your viewership, and I'll see you next time.